Shares of Celsius Holdings were down as much as 17 to 18% on Tuesday. Right now, the time I'm making this video, stock is down 14.21%, meaning the market cap of this company sits at $19 billion. Year to date is still up close to 50%, and year-over-year returns are over 90%. If we look at the forward PE, EV to EBITDA price to sales, we are at 69.3 times forward PE compared to its 5-year mean of 169.1 times. Forward EV to EBITDA 45 times, way less than the 5-year mean. Price to sales a bit the same, 10.3 times. Price to free cash flow, that's a last 12 months metric here. It's at 70.5 times and going lower quite fast. The 5-year mean sits at 170.9 times. Currently, the average analyst price target still sits at $90, representing 10% upside from the price we're at today. So, what exactly has happened today? What exactly is the reason why the stock has gone down as much as 17% throughout the day? This is exactly what we're going to discuss right now in this video. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the main reason is basically this report. Celsius Holdings slumps after Nielsen data cools off a bit. PepsiCo is also going down. PepsiCo has a 8.5% stake in Celsius and is of course their main distributor and partner. So Celsius Holdings slumped in early trading on Tuesday as analysts digested some of the latest Nielsen retail store trends. Morgan Stanley analysts noted that Celsius sales growth slowed sequentially to a plus 39% pace for a 1-week period that ended on May 18, and its market share dipped to 10.5% from the latest week from 10.8%. Wow, disastrous drop, right? Also, this is, by the way, just a trend for one single week. Anyways, of note, Celsius pricing for the latest tracking period was down 7.2% year over year. Regards to some analyst comments here, so that analysts warned that sales growth for Celsius appeared to be slowing based on the latest Nielsen retail trend data. The firm noted that Celsius sales growth slowed sequentially to a 39% clip for the week ending May 18. The energy drink maker's market share also dipped, like we've seen before. Although Morgan Stanley is cautious in the near term, the firm sees a robust US runway for Celsius based on increasing items per store, improving placements in cooler locations, and growth in non-tracked retail channels. However, sales comparisons will be difficult over the next several quarters as velocity growth from its distribution agreement with PepsiCo begins to taper. It could potentially cool sentiment, Morgan Stanley warned. They still maintain equal weight rating and a $75 price target. We also had some more positive comments here. Analysts at Stifel, I think it's Stifel, also wrote that Celsius sales in Q2 could be impacted by the Pepsi system adjusting the amount of Celsius inventory it holds. The firm reduced its Q2 sales estimates to reflect expected inventory reductions. More on that a bit later on. But Stifel raised its price target on Celsius stock to $95 from $85 based on increased confidence that Celsius can maintain its market share gains. The firm also believes that demand is healthy, and hosting meetings with the CEO and chief of staff, Stifel maintained a buy rating on Celsius stock. They also filed for a mixed shelf offering last week. My opinion, just a nothing burger since the stock didn't really react that much when that was announced. Now, for those that need it, this was a small reminder of last quarter because basically right now we're back to prices not seen since, well, the day of the earnings. So, year-over-year change in revenue, that increased 37% year-over-year. North America also grew 37%, but international is growing quite faster. I still expect international to continue to grow quite fast. That was up 43% year-over-year. Gross margin increased 740 basis points. Net income increased 89% year-over-year. Net income attributable to common shareholder up 106%. Diluted EPS up 108% year-over-year, and adjusted EBITDA up 81% year-over-year. So again, quite a tremendous growth story. And remember, we covered the Celsius earnings report the day it was released. Stock was going down because of a revenue miss, but it took a day or two for a stock to recover and go up. So what, did suddenly sentiment change? Or is the market just doing what the market has been doing in the short term? I mean, the quarter, the results didn't really change much. And this 1 week trend, in my opinion, doesn't really mean much either. Could be an opportunity, could be some people taking profits. That's also a possibility. Moving on here with regards to the sales trajectory, of course, we know in the past couple of years, sales growth has been incredible. Then, of course, you are now lapping those difficult year-over-year quarters, which is exactly what the analyst has said, which in my opinion will happen until you see international take a bigger chunk of the overall revenue. We know that Q2, Q3 is usually higher than Q1. Q3 is their best quarter, so it remains to be seen what happens in the coming quarter. But so far, I don't think we are going to see a real slowdown in their growth. With regards to the international expansion, so sales in Canada began in the first quarter and continue to exceed pre-launch expectations. They also announced plans to expand its sales and distribution into Australia, France, Ireland, New Zealand, and the United Kingdom in 2024. Sales in the UK and Ireland began in April through the fitness channel and select gyms, which of course could have already a positive impact for the coming quarter. Sales in Australia, France, and New Zealand are expected to begin in the fourth quarter of this year, which is usually their, let's say, weakest quarter. So we're only going to see those effects in 2025. They say here, those will broaden reach throughout 2025. I do think that the international story for Celsius is just starting, and that might help them with regards to the year-over-year comparisons, because of course, for a company that was growing extremely fast, still growing fast right now, the bigger you become, the more difficult it becomes to grow at 40% or so year over year. And with regards to last quarter's growth and the weakness there, so the growth was offset in part by inventory movements within our largest distributor, which is Pepsi, where first quarter 2024 inventory days on hand declined versus the fourth quarter, resulting in an approximate $20 million impact. Ongoing inventory fluctuations may be expected in subsequent quarters because our largest distributor constitutes 62% of our total North American sales during the first quarter of 2024. Which probably means they are preparing the investors for the coming quarters. Whether or not this will happen remains to be seen, but if it happens, at least it won't be a surprise. And so looking at the graph right now, seems like $95 or so was the top, a double top actually, because we also reached those prices back in early March. Right now we went under the 50 and the 20-day moving average, but we have recovered a little bit, which means we're now at $82. The 50-day moving average sits at $81.66, the 20-day one at $86.81, and the 200-day one sits at $66.49. Of course, double top is usually not the greatest thing to see. If we go and we break, this is on the weekly by the way, so if by the end of the week we break under the 50-day moving average, then look down below at around those 200-day moving average prices. Which of course, if we zoom out and look at what happened in the past, the 200-day moving average was respected and we saw an instant rebound of those areas. So that's about it. That's the explanation why Celsius dropped today. In my opinion, for long-term shareholders, nothing has really changed. The thesis is still intact. If you're looking for better opportunities to add to your position, maybe this might be one of those days. Remains to be seen. Of course, one big red day can be followed by another couple of red days. I think we're still getting some macroeconomic data coming in the next couple of days. That might impact the stock as well. But overall, that's about it for this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.